Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host. So pleased to be with you. Thank you to all the listeners each week. Our audience keeps on growing, and I appreciate the support. I've got Brian London with me, the Director or Chief Executive of Jefferson Financial and the CEO of the Gold Newsletter, or the New Orleans Investment Conference. And our guest this week is Ross Gerber. He is the president and CEO of Gerber Kawasaki Wealth and Investment Management. This is an SEC-registered investment advisor. An investment advisor and a fintech innovator in America. And the website is gerberkawasaki.com. Ross, welcome to the Gold Newsletter Podcast.
Thank you for having me.
Yeah, we were just chatting before the start of the show about his maybe some contrarian views or his pushback against some of the hosts we've had on the show, and this is I'm licking my lips at the prospect of a bit of debate. So, Ross, you've gone out on a limb or stuck your neck out in defending Tesla against many of the critics. Why have you been so optimistic or willing to do so?
Well, there's a couple things. We started with Tesla, 6 or 7 years ago when the Model S was launched, and so as investors, Tesla's been one of the top performing investments that we've ever made. So, our original investment in Tesla was about $25 or $30 a share. And, over 6 years, if I can make almost 10 times my money in it, and at one point it was well over 10 times my money, I'm usually pretty happy with those companies because you only get so many of those, a decade. So our experience with Tesla is different than investors who have been, sort of like more recent investors who have dealt with a lot of the drama that we've had over the last year. And I think a lot of the criticism to Tesla is legitimate in that Elon Musk and the way they run their company is unlike, any company that we're invested in. And we do consider it a high-risk investment. So I would warn investors, by no means do we consider Tesla like our safe and stable stock like Apple, which won't take any risk at all. So, we own a lot of Apple, substantially more Apple than Tesla. I can't get Tim Cook to take a risk on anything, you know what I mean? So we invest in Tesla because we love the fact that Elon Musk is betting the farm on growth of the EV market, and they've created a product that's unlike any other product in the world. And what I think most investors don't get with Tesla is they just don't fully understand the technology in the car like we do, and they don't really get this revolution that's happening here now in California. I mean, in a huge level, Tesla has taken over California now. They are literally everywhere. And so a lot of the skeptics really just haven't seen what's happening in countries like Norway or here in California, where people who are conscious about what's happening in our globe and want to take a conscious decision to make a better choice on what they drive, not only is it a better car, but also for the environment. This wave of change is overcoming the entire global auto industry, and we're seeing the cracks now with GM and the German car makers really starting to struggle.
Ross, I do want to cover other topics, but can you kind of briefly go over then what your view is of Tesla's technological advantages and also perhaps address their financial situation, which, I think those are the two key areas that the critics kind of hone in on.
Right. And so the first moat that I think is the biggest moat for Tesla is the gigafactories and the ability to make and produce batteries and scale. So this is a really important part of the climate change solution that we're invested in is actually batteries. So batteries are the solution also for solar and renewable energy as well, and making them much more efficient and profitable. And so the big issue we have, and even with our iPhones, we're still desperate for a battery that can last all day. So battery technology is really, really difficult. I think most people don't really fully get, like if Rivian gets an order for 100,000 trucks from Amazon, I'm like, that's great, but how are they going to do that? They don't have the batteries. So there's only really two battery makers, so LG Chem is the biggest one, and everybody's ordering from LG Chem, and they just can't fill the supply. And then you've got Tesla, which just built another gigafactory in China, which it produces more battery power than anybody in the world. So this is a huge moat, being able to produce high-capacity batteries and scale.
Didn't he have some news today or very recently that Musk announced a 1,000,000-mile battery, or announced that he'll be able to produce that very soon?
Yeah, they've been, sort of behind the scenes working really hard on their own technology and moving away from Panasonic's. And, once again, this is really tough technology. So they recently made an acquisition. Even when I study electricity and batteries, this isn't my thing really. I'm not an engineer. It's super complex. So, this is not an easy thing I'm just going to build a battery factory and make tons and tons of high capacity batteries that don't explode. So that's very hard to do. So that's one mode. The second thing is the technology inside the car. The Tesla is really like an iPhone on wheels. It's when you actually see one being built, there's very, very few parts. One doesn't really, we all live in this ICE car mentality because we've all had them our whole lives. And I love cars, that's part of it. I'm a car guy, and I like gas cars, many of them I love, so it's not like I'm a hater of gas cars. It's more just accepting reality. We have to change for the environment. And so the Tesla they built is such a great car, but inside this car is all technology. So when you take it apart, basically you have wires just going everywhere all around the car because it essentially is a big iPhone. But once you get into the interface of the car and the technology of self-driving, as well as the interface with the consumer, it's very much like Apple, where it's just so simple to use, so simple to drive, everything's centralized, everything makes sense, wonderful technology inside the car. So when you get in a BMW or Mercedes today, they have these little screens and these little infotainment systems that literally are like my kid could invent them, and then you get in the Tesla and it's like using an iPhone. So it's just like the analog phone to the digital phone kind of thing. And that's exactly what this is technologically with the Tesla. So I think that's the other big thing. And as they release full self-driving, which is coming very, very soon, I'm actually one of the few people in America that has been in a full self-driving Tesla and have driven around Silicon Valley in it. And so I can tell you it works. And it's very close to being, what they call feature complete, meaning it basically works, but you'll still need a driver for some time. But this technology is going to change the world for sure. So these two moats, I think most people either underestimate or don't fully understand the complexity.
Well, yeah, one of our other guests, Mike Larson, who's also going to be speaking at the New Orleans Investment Conference, he has been working on a book about what he calls the Uber bubble. And that's why he has the saying, boring is good. And he's basically warning against a lot of these tech companies. He thinks we're in basically another, like a dot-com bubble, a repeat, but a tech bubble. Why is he wrong?
Oh, he's substantially wrong, and I'll tell you why. Look at WeWork this week and last week. So there is definitely ridiculous valuations that private equity people have assigned to companies that don't make anything or do any business, but that's irrelevant because the dot-com was really a public markets problem, not a private markets problem. And so the public was involved with a huge bubble. I tell, I was an investor at the time. I've been in the business 25 years. And so I tell the kids who work for me all the time about dot-com because I was lucky enough to start my career in the early 90s. So I wrote it up, and then, unfortunately I had to write it down too. When you have a euphoria like .com where the S&P was trading at 32 times earnings and, stocks, like I would buy AOL stock in the morning, it would jump 10 points and I'd sell it in the afternoon. And I was like, dude, they're just giving money away daily. Like that's how good it was in the 90s, So certainly if you look at the markets today, it is nothing like that. You got to fight and scrap for every good trade, and valuations, look at Netflix even right now. It's coming down. It was a really expensive stock. We've made good money on it. We sort of exited our position because of Disney. We're big investors in Disney. And I'm like, wow, this is really healthy because, stocks that aren't performing well are not doing well, and stocks that are performing well are doing well. And these IPOs like WeWork that normally would go public and be up like 1,000%, or Uber, they've actually done really poorly, and if not even been, rejected from the public market. So I don't see any bubble right now at all, other than the bubble the government is creating with printing money and rates and bond yields so low. That's the bubble, is like our government has gone nuts printing money and borrowing money. So considering this is a gold-focused show, it's probably never been a better time to invest in gold if you think about what's really happening across the globe with currencies. So that's where I think there's risk, and I think the governments of the world have done a horrible job managing currency, rates, economies, and so, gold and Bitcoin, which we both are bullish on right now, I think are wonderful monetary alternatives.
Our people that come to our conference are big value investors, so they're a bit afraid of buying in something that's run this long and this hard and this high. But they're also very interested in what the next big thing is. In fact, that's precisely why I wanted to invite you to present at this year's New Orleans conference, is because you do have this kind of holistic approach of what's the next thing. And we actually have you on a panel entitled that, What's the Next Big Thing? What are you looking at that might be some transformational technologies or sectors to invest in where people can feel like maybe they're at the beginning of this really big trend?
Well, that goes back into Tesla and the bigger theme that we're invested in, which is what we call climate change trade, where we look at like the world in decades. So like last decade, social media, for example, exploded. There was no social media 10 years ago. Like we were first on Facebook posting, back when it was like, you had to have a college email to get on Facebook. And, I was trying to get my stepfather's email just to get on it.
I remember those days so well. I was a college student in Boston when it started at Harvard, and I think Boston University, where I went, was the second school to pick it up. So it's amazing how quickly the world has changed.
We were on that trend, not early, but I would say middle, and that, that was been pretty profitable as well. We're out of Facebook now and mostly out of social media, because now I think it's like cancerous. So I think the trend is actually away from social media now, actually, even though it's super, super important in media. I think, it's somewhat harmful for people, it seems to be. We're looking at climate change and we say, okay, so the world's burning up, the beaches are being destroyed, huge hurricanes wiping out countries, droughts. Okay, so what are the solutions? What companies are really going to profit off the fact that whether we like it or not, Mother Nature is saying we have to change? Who wins here and who loses here? Well, the winners are the people who are innovative enough to come up with solutions. And a perfect example is a company that we like a lot called SolarEdge, which makes inverters for solar. There's two. There's Enphase and SolarEdge, and they're the top holdings in the ETF TAN, which we have a position in, and that's how I prefer to play it, because there's a lot of good companies in solar right now. But if you go back 5 years, solar wasn't really profitable. It just, the economics didn't work. And you go back 10 years, it didn't really make any sense. And all of a sudden now, because of the massive decrease in cost in solar panels, solar is now a higher return energy investment than coal or oil or natural gas. If you were going to create energy, let's say in a new neighborhood, it makes a lot more sense to put up solar and renewable than it does any other source of energy now, economically speaking. What we're seeing is utilities across the country are now building renewable projects instead of natural gas projects in places like Texas. So we're also invested heavily in a company called Next Era Energy, which used to be Florida Power and Light. And now it's the biggest renewable energy company in America, and all they're doing is building solar and wind, a lot of wind in like Texas, for example. So here, the breadbasket of oil is also a wonderful place actually for renewable energy. And so we look at all these companies that are involved in either the technologies to make solar and renewable energy, more profitable and efficient, as well as the people doing it, from the electric car companies, battery makers, inverters, solar panels, So when you look down the line of like all these potential solutions, there are many, many good companies, profitable companies, and these companies have done very well in the stock market as well. So we expect this trend to continue for the next decade. So, not having these kind of companies in your portfolio will certainly hurt, where the value investors are buying oil companies right now. So they're saying, look at how cheap oil companies are. They're the worst performing sector in the stock market, but they're not understanding why that is. And one of the reasons that is that demand for oil is just not going up as much as everybody had thought. And the supply of oil is going up constantly to the point where they have to pull supply off the market now. And so even though oil's cheap and maybe pays dividends, over time, this is not an area where you're going to see growth. And if anything, we expect oil prices to be under pressure for forever to come. And really, it's going to be a difficult time for people investing a lot of money into the oil patch. So these trends, like climate change, are, to us, one of the greatest opportunities over the next decade.
The Gold Newsletter podcast is proudly sponsored by the Discovery Group of Exploration and Development Companies. To learn more about our exceptional track record and exciting future, visit discoverygroup.ca.
Well, welcome to our latest CEO interview from the Discovery Group, our proud sponsors of the Gold Newsletter podcast. Each episode, we interview one of the Discovery Group companies, and this is something I'm very happy to have as part of our podcast because the Discovery Group has just a tremendous track record of success. A number of these companies have been recommended in Gold Newsletter and made a lot of money for our subscribers. The list goes on and on. Kawasaki made a lot of money for us. Bluestone is currently making money for us. Northern Empire did very well for takeout. Great Bear has been just extraordinary for our readers. And we're talking today with Jim Paterson of ValOre. I'm very happy to feature this company today because I'm a long-standing shareholder back from when this was a uranium company, but the company has been rejuvenated and kind of repackaged partly in response to this new move in the metals and partly in response to a remarkable acquisition that they were able to make. I've known Jim for a few decades, actually, and we go way back in this industry, so I'm very happy to interview him today. And he's part of the Discovery Group from its earliest days, which was founded by John Robbins, who is one of the most successful mining financiers and entrepreneurs in the business. So I'd like to get right into it. Jim, ValOre recently, I guess a month or two back, made this announcement of this remarkable acquisition it made, and it's kind of gone quiet, but I guess like a duck that seems very calm on the surface, its feet are really busy underwater since then. So you have been busy, haven't been putting out much news since then. Can you kind of set the stage on your big acquisition, what it means for the market, and how you're setting yourself up for a lot of news flow down the road?
Absolutely. It's an honor to be here, Brian, and you're right. We've known each other for more than 2 decades, and you're right with your analogy. There's a lot of paddling below the surface. Keep in mind that the acquisition was only made a little over a month ago, and we actually closed it. But I'll go back a little bit further. If any of your listeners were shareholders in the company Kawasaki Energy Corporation, primarily a uranium explorer in northern Canada, they definitely have felt our pain. We got blown up by Fukushima and the ramifications in the global uranium sector from that. And, we held on to the project. We continue to hold on to the project. We think it's a very high value asset. But last year, we made the decision that there's just a whole world out there in terms of opportunities. And my strategy was really informed by the successes that we were having with, as you mentioned, Bluestone was one, Northern Empire was another, and there was a little while earlier than that, we had the sale of Kawasaki. And I recognize that there's just a lot of opportunities out there where you have a project that has been unloved and mismanaged by the management team. They didn't take advantage of all the data they had or the infrastructure. And our group, called the Discovery Group, we're really keen on exploration to add value. And so sometimes these projects are out there just sitting dormant within a company. And, our capital market strength, our exploration and discovery strength really lends itself well to make acquisitions, add a lot of value, and do well by the shareholder. So this year's been really transformative. Last year, we renamed ourselves ValOre Metals Corp, so formerly called Kivallic. We rolled the company back to make a better, more attractive structure for new investors. And then in January of this year, we conducted and closed a rights offering. And my philosophy on the rights offering is that, we look back at what happened in the uranium markets, and, it did decimate the sector globally. And then what do we do? So, any and every shareholder was allowed to participate, and many of them did. And that just gave us the capital to go out and do the review and due diligence necessary to make acquisitions. So that was our strategy, look for projects that are undervalued, that exploration and discovery could add a lot of value. We like big projects with district scale potential, those that if we succeed will be attractive to major mining companies. So that's sort of what we're looking for in an acquisition target. And we found it in the Pedra Branca project in northeastern Brazil, which, as you said, was a Platinum Group Metals or PGM project in a very mining-friendly area of northeastern Brazil.
Yeah, and that project, it's amazing to me when you look at it. First off, I get asked by investors all the time, especially with the tremendous run in palladium, what's a good palladium project out there? What's a good PGM project out there? And there's just hardly anything out there, at least from a early stage exploration standpoint or exploration/development. And you were able to find a project that not only has a very significant resource at really good grades, but had tens of millions of dollars of work done on it and tremendous upside. And it's amazing to me that this was just lying there, and the previous management or previous ownerships weren't able to really recognize what they had and bring that to market.
Yeah, I think that the previous, we bought it from a company called Jingada, and they absolutely recognized the value. They may have put themselves in a bit of a spot being on the AIM, and maybe perhaps they weren't in the proper position to be able to raise money and advance it. And then we also have to recognize that even though that there's sort of a run in the commodity prices, the ability for most junior companies is still pretty limited to raise capital. And then being part of the Discovery Group, we've been pretty blessed to be able to raise money. So when we have an idea, we can go out and execute on it because we've got the backers financially, and not every company has that the benefits that we have as ValOre because we're part of Discovery Group. So a lot of money has been spent by previous operators over the years, but what we're recognizing right now is that in the next couple of months we can add a lot of value to this project just by mining the data and doing a few additional very low cost activities to really refine it and our understanding. We're all super excited about this. We think we're going to get on the ground and we'll be able to make, rediscoveries based on the data, new discoveries, which is awesome. We love doing that. And then just from a real practical perspective, I think we'll be able to go in there and be ready to add or expand the existing resources. So
the existing resources are very large already, aren't they? Can you go into that just a bit?
Well, no, I don't think that they're very large. I think that the project has massive potential, but we're looking at just over 1 million ounces. So on a global perspective, that isn't really large. I think, though, that one of the things that we really like about it is that, and I was struck by this when we were visiting as our due diligence and all the follow-on visits, that this mineralization is very shallow. So, for example, some of these holes were drilled and they hit mineralization starting at 0 or right at surface. And so when you look at, moving a project along, you don't want to be drilling super deep holes. You want to be drilling shallow holes, and then you maximize the amount of that drill core that's actually being analyzed and can add to the mineralization or the resource. So these are shallow. The orientation of the drill bodies is such that it just seems to follow the topography in many cases. So when you're looking at exploration or even potential future mining, you're not having to move a lot of rock that you're not getting paid for before you get to the mineralization for which you will be paid. So we like that. We think there's lots of growth potential there.
Well, Jim, as a shareholder, I love it that you're looking at 1 million ounce global resource is not that big and your goals are set much higher. So we look forward to the news flow coming up as you get on the ground, make these rediscoveries, and hope to expand that resource. And I think that it's just a wonderful time for investors to look at ValOre while that paddling is going on under the surface, and the market doesn't yet realize what's at hand and what's in the future. So thanks again, Jim, for joining us, and we look forward to the news flow coming up.
Thanks, Brian, and we will look forward to catching up with all your listeners at the New Orleans show in November. I think that'll be a perfect time to provide an update.
Perfect. Thank you. So your belief in lower oil prices is due to a decrease in demand, long-term decrease in demand, rather than increases in supply, or both?
I think it's both. Yeah, I think it's both. So you obviously have increases in demand in the emerging markets, but you're seeing decreases in demand in the industrial markets and industrial economies. So we expect places like Europe and the United States to really drastically change the infrastructure towards electric vehicles. And there's a lot of companies, and we like some Chinese companies, and we expect China to do the same, because in a lot of countries, people forget that you can't breathe in the cities now. So if you go to Beijing on a typical day, you can't breathe. It's like really bad. You can't actually like walk around.
Yeah, if you do the research into this air pollution is taking many years off people's lives. And throughout the world, this is a plague.
And the cost for cancer and all the diseases that are spawned from it. But back in the 80s, when I was a kid in LA, we had really bad air, and I used to skateboard a lot downtown at some of these buildings. And, we used to kind of like come home half sick, from pollution. And LA changed their laws and did a lot of things, especially with the formulation of gas and emission standards and all this kind of stuff. And LA still has, decently bad smog, every day, because there's so many people here. But like, if we didn't have that, you wouldn't be able to breathe in LA today. If you look at, India or Indonesia, they're talking about moving the capital of Indonesia just because of the weather, so like, look at a city like Miami. I love Miami. It's one of my favorite places to go. And New Orleans actually is one of my favorite places to go, which is one of the reasons I'm excited to be out there. I love New Orleans, but it's literally underground. And New Orleans is one storm away from being destroyed. It's same with Miami. And it's like, how many flirtations are we going to have with doom before we actually take these storms seriously? Because this last storm, if it would have hit Miami head on, it would have been $100, maybe $1 billion event or more, and the human cost is enormous.
Even here in Houston, we face that really difficult challenge, because it seems any decent bit of rain and we're all at our wits' end.
Oh, totally. Well, there was a ton of rain just recently.
Exactly. The airport was underwater just a week ago.
And out here we have the fires. So like half of Malibu burned. Like I was driving through Malibu the other day up where it burned. And it's such a trip just to see, because a lot of it's grown back already, like the underbrush. But the trees are all black because they've all burned. So you have this like green underbrush with black trees. It's really surreal. But you're like, man, this whole area was on fire. And now you can't get fire insurance in Malibu. And these people, they don't know what to do, and it's like, you're crazy to buy a house in Malibu. I think real estate's one of the biggest risks, actually. In the real estate business, don't love me, because I think real estate is way riskier than what certainly real estate agents will tell you. I mean, they'll sell you a beachfront property in Miami right now. Oh, and by the way, watch out for the next storm,
Well, it's location, right? For real estate.
Yeah. And definitely beachfront real estate is not a great idea anymore.
One of the areas, or some of the areas we focus on, because we're focused a lot on resources. We started off on gold as trying to legalize that for American citizens, and gold as an investment against and protection against the inevitable government mismanagement of currencies and the fiscal situation, et cetera, et cetera. But we branch off into that, and have in the past, into rare earths and critical metals and other resource type investments that have other drivers. And one of these being this electrification of transportation and clean energy, and then leading into batteries. And that leads into, of course, lithium and cobalt and nickel, et cetera, et cetera.
Right.
So one of the things I've been looking at, and always am actually, is palladium and platinum have been in kind of a bull market, especially palladium. And part of the reason is because everybody got caught up in this. EVs are just going to explode. And so the corollary to that is that the internal combustion engine is going to fall off a cliff, or usage is going to fall off a cliff. Therefore, there won't be that big of a demand for palladium and catalytic converters. And it's just been really the opposite. It just seems that people did not appreciate. They jumped onto the new train going out the station, but forgot about the other one that's still chugging along, that there's still such demand for internal combustion engines, and part of it from China for catalytic converters for the reasons we just talked about, that there's been a real supply crunch for palladium. So I guess what I'm saying is the electric vehicles could double and quadruple and double again in usage and still not approach the usage of internal combustion engines. So just because one is growing so rapidly and may be a way to invest, does it really imply that the other area is going to just shrink so rapidly? I mean, what kind of a time scale are we talking about here? Isn't it 30 or 40 years before we get away from internal combustion engines?
I think you make a very good point in that, one of the lessons I learned as a really young investor was I get super excited about a technology and I'd invest in it, but I was like 2 years early, and I'd sort of be sitting on my thumbs. And one of the things I realized was like, well, you got to kind of invest more like 6 months to a year before something, not like years before something, because things do take a certain amount of time for them to play out, and patience is sort of key. And I agree with you in that there's no possible way for us to replace 100 million cars in the United States, with just electric vehicles. There's just no capacity to do that right now. So, yes, one is growing by 100% a year and another isn't really growing at all, but it doesn't mean that it's shrinking. Where I see cars going is about efficiency. So like there's going to be plenty of ICE cars, but why do they get 12 miles per gallon on a big chunky SUV that, somebody doesn't even really need versus, hey, maybe we can make an internal combustion engine like they do now with 30 and 40 miles per gallon. And so it's just a much more efficient engine. And that works too as a solution. The 50% of the cars sold are trucks that, are basically SUVs that have horrible gas mileage. So we're not necessarily talking about the end of the internal combustion engine anytime soon. What we're talking about is how do we make this more efficient? So as an investor, maybe that's where I'm looking on the ICE side, like Cummins engine, not that we have an investment there, but how do they modernize the engine to make it more efficient? And those will be successful investments versus I'm GM or Ford just trying to sell tons of high margin trucks at the environment's expense and have no desire to innovate at all, and those are the companies that are really going to suffer because they're not offering consumers alternatives to the gas guzzling cars. And when Rivian comes in and when Tesla makes a truck, they're dead,
Well, I can tell you, I'm not giving my pickup truck, giving it up anytime soon.
Well, you don't have to give it up. I don't think it's that. I think if you could buy a pickup truck that got twice as good a gas mileage, why wouldn't you, right? So it's like it's not about change, it's about just making it more efficient, and they can do that if they want.
I saw an analyst, I forget how long ago, I guess it was on Twitter or something, and some analysts are saying that how are pickup trucks exploding so much in popularity? They didn't know anybody that actually owned one, and it's kind of speaks to the bi-coastal nature of the United States. And I thought about it, and it's like I don't know anybody who doesn't own a pickup truck, or I'd have to think pretty hard to come up with
so
somebody.
Funny. So. I know, and out here, if you don't own a Tesla, it's almost weird now. It's so funny the difference in culture in our country. But I've spent a lot of time in the South, and I actually love the culture in Texas. I love Texas actually, and a great state, and the people are great, and of course the food is off the charts, way better than our food. So the way I look at it is pickup trucks are cool and people like pickup trucks, and there's a lot of need for pickup trucks, and there's going to be solutions that are EV, and there's going to be better solutions, I think, because of the EV competition in regular ICE pickups. And there's no reason why you can't make a pickup with, 50 miles per gallon and be efficient. It's just about profits. But if pickup drivers understood that they're paying, like 40% profit margins to the companies just for these sort of cheaper internal parts that could be upgraded to be much more efficient for the environment, I don't think pickup truck owners wake up in the morning and say, I hope the world burns up. You know what I mean? I think pickup drivers want to keep driving the trucks they want, and they just want a better version of it. And I think that can happen.
I think they are getting increasingly aggravated, though, that by buying a pickup truck, they're supporting or they're subsidizing all of the clean vehicles because of the mandates and subsidies, and the fact that the automakers can't profitably make an electric vehicle right now, or even for that matter, a very fuel efficient vehicle at a profit.
They can, they can. I don't think the technology's that hard. Yeah, it's just effort, Like if you said to Ford, okay, I want you to make an F-150 with 50 miles per gallon and just be like the dopest F-150 and it'll save the company. Like, isn't that what they should be doing right now? Because if they're not, they're dead, because they're going to run into, like, this Tesla pickup's going to be amazing. And we polled pickup truck drivers, at least here, and no one really cared about the brand. They cared about how good the truck was. And so if the truck is better and competitors come out with better pickup trucks that are electric, I mean, these companies are dead. I would be innovating hardcore. If I'm GM and Ford, I'd be making the best pickup with 50 miles per gallon, and then, you're safe.
Yeah, it's going to come down to range for the batteries for an electric pickup, because the performance is certainly there and the power will be there. But how long can you stay behind
plus
the
being
wheel?
able to plug in all your tools. Being able to plug in all your tools and stuff into the truck itself is super cool. So you can pull your truck right up to the site and then just use that to power everything. And it's like, we joke about it because I have a band, and if you want to go play out on the street, you got to take this car battery. I've played with car batteries before powering the band, out in Venice Beach. And, if you think about pulling up a truck and having a huge battery that could, really power a whole job, boy, that's pretty cool.
Right. Well, we've been speaking with Gerber, and his website is gerberkawasaki.com, Gerber Kawasaki Wealth and Investment Management. If you want to hear him speak in person, come to New Orleans it's very soon. So just over a month, and we look forward to meeting you there.
Yeah, I'm excited. Thanks for having me.
Ross, great to be with you. I think you're going to have a wonderful time in New Orleans. Wait till you see this event. It's really exceptional, and I think you're really going to enjoy it.
Yeah, thank you.